cryptocurrency tokens and stable coins in particular are a natural hedge for them, and they understand that. And so when you talk about adoption, earlier I mentioned about sort of, you need capitalism, and essentially that's kind of thing. I have a need for that. And that's actually why South America adopted crypto so rapidly. Now, money generally is a trust system, right? If I trust it, if people suddenly didn't trust the US dollar, it kind of screwed as well, right? And because the US has an element where you trust it, and because of the government and the size and all that kind of stuff, you sort of give it that trust because everyone else is using it, right? But when others stop using it, or when they don't hold it, and they basically, because money is being printed all the time, right? That's the other thing. People used to believe that money was a store of value. Those who still believe that, they're not going to make it, right? They have to understand that money is basically being printed and will continue to be printed in sort of, an almost sort of modern monetary theorist type of way, right? We've gone away from sort of fiscal discipline. I mean, just look what happened in the US government right now, right? Yeah. Just shut down.
Welcome to The Edge of Show, your gateway to the Web3 revolution. We explore the cutting edge of blockchain, cryptocurrency, NFTs, ordinals, DeFi, gaming, and entertainment, plus how AI is reshaping our digital future. Join us as we bring you visionaries and disruptors pushing boundaries in this digital renaissance. This show is for the dreamers, disruptors, and doers that are pumped about where innovation meets culture. This is where the future begins.
Hi, everyone. Welcome back to The Edge of Show, live at Token 2049 in Singapore. I'm very excited to be here again with Yat Siu, the chairman of Animoca Brands. Great to have you back on the show.
Thanks for having me.
Always good to see you. And, for context, at this point, you guys have over 600 Portco companies, including the Edge of company. Very excited to be part of that family. And the conversation has evolved quite a lot, I'd say, in this cycle where we're opening up new doors with RWAs, with other types of tokenization. What is it, do you think, about this moment in time that has unlocked this possibility relative to the past? Is it that the regulatory climate is open, it's not the Wild West anymore? Or is there something else in the water that is sort of causing this sort of catalytic effect?
I mean, the catalytic effect is, I think, two things. One, regulatory certainty, or at least the belief that regulatory certainty is coming because of the signals that are out there, led by the US. And of course, the other one is that that's, of course, created institutional interest and adoption. It started with the Bitcoin ETF, and now it's gone all the way to digital asset treasury companies. Everyone's talking about tokens. They may not fully understand it, but they're like, oh, there's a NASDAQ public company that has some tokens. What does that mean? Right? These are all ways in which basically institutions are getting involved. And so you put that all together, there's actually not just a belief, but an understanding that tokenization is real and here for the long term. And it reminds me a little bit like the early days of the internet, right? When people talked about, .com companies and so on, they're like, what's that? What's a .com? Why am I on the internet? I don't understand it. Mosaic browser, Netscape. These are all things that they didn't really understand, but they needed to learn about. And that's kind of the stage that we're in. And I would argue that the demand was always there, but it was sort of suppressed because of the regulatory uncertainty, or actually I would say more like the regulatory hostility, depending which country you're talking about. And that's now gone away, which means it's opened up those floodgates.
Very cool. So we talked about some of the big markets, obviously leading the charge, but you've also talked about sort of the crypto index from the perspective of adopting markets in the relative adoption per population.
Absolutely, yeah.
Maybe you can speak to some of your insights there about countries like Ukraine, which might, is a surprising sort of leader in that category.
Yeah, I mean, I think outside of Ukraine, you've got like India and all these places. And it's an example where you have really sort of categories of places. I would divide them into two. One of them are really sort of classically defined as developing countries, where people don't even have bank accounts, but they want to have some kind of stable currency, or at least in their perception, stable currency. You saw that what happened in, Argentina, for instance. South America is one of those places as well. And stable coins have become one really big angle of adoption because, look, I may not understand the volatility of a token, but I do get a dollar, and it's a digital dollar, and I can basically then participate in the wider growth of that market. So that's kind of one path of adoption that we're seeing. And the other one, of course, is when you look at places like Ukraine or formerly Eastern Bloc countries, or sort of Soviet Union satellite countries. These are countries that really came from a system which was communist and therefore had nothing. And then they got introduced to capitalism and property rights, and they're like, hey, this is cool. So their understanding of that evolved not just from the physical sense, but into the digital world very naturally. But you have the same effect in Asia. So for instance, crypto adoption, the number one country in terms of number one continent that has the most crypto users collectively is Asia. And again, if you think about the capitalist and sort of democratic and property rights revolution for Asia, it's really been over the last few decades. Like, if you look at, for instance, South Korea had a GDP lower than North Korea 40 years ago. That's hard to imagine.
Wow.
Right? And now it's the 12th largest GDP. And now guess what? What is the number one country in terms of crypto adoption? It's actually Korea or some version of that. You have and in fact, another interesting stat is that in Q1 of this year, the Korean won was traded more frequently than the US dollar, right? So just to give you a construct of, the countries that basically embrace capitalism, that actually appreciate it much more, are also the places that actually, or need capitalism, right? Are the places where crypto adoption happens faster. And in America as well, for a developed place, what are the centers of crypto? It's Miami, it's New York, right? And guess what they have in common? A love of capitalism, right? In contrast to, for instance, Silicon Valley, which has a lot of good technology, but it's not the center of crypto because it's also not sort of as capitalist, shall we say.
So what does this mean for sort of countries that are suffering from hyperinflation, where even, everyone's trying to avoid using their currency, like, for example, challenges in Brazil right now. We all knew about the Zimbabwe hyperinflation we're dealing with, like people were looking at currency and weighing it to figure out what it's worth.
Yeah, I mean, I think there was an interesting example of an image where they were showing sort of how much, what the worth is of the paper and the toilet paper and money. And actually, it cost more cash money, and it was more money weight than actually toilet paper, right? Stuff like that. Wow. Like, it's pretty insane, right?
Yeah.
But so first of all, hyperinflation, cryptocurrency tokens and stablecoins in particular are a natural hedge for them, and they understand that. And so when you talk about adoption, earlier I mentioned about sort of you need capitalism, and essentially that's kind of thing. I have a need for that, and that's actually why South America adopted crypto so rapidly. Now, money generally is a trust system, right? If I trust it, if people suddenly didn't trust the US dollar, it kind of screwed as well, right? And because the US has an element where you trust it, and because of the government and the size and all that kind of stuff, you sort of give it that trust because everyone else is using it, right? But when others stop using it, or when they don't hold it, and they basically, because money is being printed all the time, right? That's the other thing. People used to believe that money was a store of value. Those who still believe that, they're not going to make it, right? They have to understand that money is basically being printed and will continue to be printed in sort of, an almost sort of modern monetary theorist type of way, right? We've gone away from sort of fiscal discipline. I mean, just look what happened in the US government right now, right?
Yeah.
The shutdown right at this moment in time as we're having this interview. Insane to think about, because people can't agree on the debt ceiling because, again, there's just too much debt, right? So you need a hedge. And that's why gold and Bitcoin are up.
So it's interesting because there's this bit of a doomsday narrative with what would happen when crypto becomes realized globally as a predominant, optimal, use case for transactions. I did a panel recently, and I asked people who transacts using crypto daily, and no one raised their hand.
Interesting.
So,
Sure.
So it feels like this convergence that we're talking about is happening, but it's not happening on a sort of day-to-day transaction cycle. If this continues to go the way that you described, and that does become a reality, is this a reality where capitalism as we know it changes, or can sort of sustain or thrive in a crypto payment world?
Well, first of all, I think capitalism will thrive even more and will become much more truer to the capitalist ethos than what it is right now. Because right now, capitalism is very much sort of restricted, depending on regulation and that kind of stuff. And you need some of that because completely unrestricted has its own problems as well, right? But, speaking quickly on the sort of element of trust, when you talk about reserve currencies, when there was a crisis in an economy, people would adopt a different type of reserve currency to create that trust. Gold used to be that standard. And it's not entirely inconceivable that you might consider a mixture of gold and digital assets like Bitcoin as that kind of medium of trust, right? So in other words, if there was a mechanism where the Brazilian government was to say, you know what, we're going to go back to the gold standard. And again, I don't think they're able to do it, but let's just say if they were able to sort of present themselves in that manner, it would bring confidence into the currency and some stability. And that's basically where I think digital assets play an incredible role as they keep building themselves up, right? Yeah, so that's kind of one thing. But I would say, to the question of sort of, these are the trust element. So trust comes from a social construct, right? And so it's not just the currency dropping, it's the fact that people in the community themselves have a lack of trust of the system in place. So if you are not trusting the government in question, then the currency will naturally drop. In the same way that if suddenly you stop trusting the US government, then actually the dollar is going to be less used in circulation or stored as a store of any mechanism because you don't trust it. So you have to, and what is that? It's reputation, right? So our biggest actual index of that is our collective reputation, whether it's an individual, right, like your credit, or whether your country. It's all reputation based.
It's all reputation. So there's two critical parts of the economy that seem like they're next up, and you've spoken to. I want to cover now in sort of the rest of this conversation. One is sort of RWAs in real estate. 55% of the U.S. economy is based on real estate, so it's a huge resource. And I think we've been in a world where as a retail investor, you're having to make hard choices about investing in the markets, investing in crypto, and buying property. And it seems like now you may not have to make those choices as much anymore.
Yeah.
Fractional real estate, it sort of seems like it would offset the increasing inattainability of real estate, which you not only want to live on, but you want to diversify your asset base with a really interesting asset class. So is that what is Animoca Brands doing in this area? I think you
we announced it's a joint venture between us and Provenance, basically launching the Nuvo marketplace on RWAs.
Okay.
Right, and obviously starting with HELOCs, but obviously that's going to expand in different areas of product that now someone around the world is able to buy a real world asset as a yield that you understand,
and they don't have to travel to that country, contract in that
they could have it in the form of a token.
Yeah.
And we didn't do this, but Republic and Solana had announced essentially the tokenization of some of our shares, right? And basically that's another way in which if you were an investor and you wanted to somehow have an ownership in Animoca shares, you can now do it through a token eventually in the future through Republic, because they've tokenized essentially as an RWA our equity. And you can see how that expands the investing framework of not just companies like ourselves, but others as well in the future. So, it's just an exciting beginning where you can basically expand that. And why you would tokenize it is you expand the market of other people who would buy it. And this is kind of where stablecoins becomes interesting, because now you have 150 to 200 million people around the world in Africa, South America, Southeast Asia, who all have the ability potentially to buy US dollar denominated product, even if they don't have a bank account.
So just to play devil's advocate, do you have any concern that this retail liquidity is just going to be sort of the buyers of bigger sort of investors and whale selling, or is it going to be a truly shared democratized economy?
I think it's going to be a truly shared democratized economy, because you now can participate together with everyone else on these new opportunities. And I think crypto demonstrates that very early on already. Think about how many people became very wealthy because they participated in Bitcoin or Ethereum or Solana in the early days. It wasn't just the big VCs. In the traditional market, you could only do so at the IPO. But here, you could be in ground zero. Yes, you take risks, you take chances, but the returns basically made more people wealthy. And crypto is a new wealth class.
I can see other bigger companies having to make their offering more available because they want a more successful IPO.
Well, also, if you don't reach out this way, I think you're not going to make it, because your competitor who tokenizes himself or creates RWAs will have more reach, more distribution, more scalability. I mean, think about what happened to companies who decided, I don't want to be on the internet. That was a thing 30 years ago. People were like, oh, we don't want to be online. We don't think it's serious. We want to stay a magazine or whatever it is, right? They went out of business, right? And so I think the same is going to happen for companies who don't tokenize. If you don't tokenize, you're not going to make it.
So everything's going in a blender now, and we're stirring it up. And one interesting sort of ingredient that some people are concerned is getting left out of the smoothie is altcoins. Mm-hmm. In that regard, there are some fun projects like you guys recently invested in a public company that's acquiring Ton.
Mm-hmm. Alpha Ton, right?
Yeah, Alpha Ton. Shout out to Brittany. But are we moving in a direction of altcoins also becoming treasuries and bundles and in
Absolutely. Yeah.
like I mean the obvious one to me is Dogecoin. Why isn't there a Dogecoin treasury yet? Right.
So before we go to Dogecoin, I mean, in order for you to be an institutionally credible product, you have to have either an ETF, a DAT, or somehow be present in a publicly listed company, because someone has to be accountable. Someone has to be responsible for the asset. And that's why digital asset treasury companies have become so interesting. I mean, it required, basically, a DAT for Ethereum between SPED and Sharplink and those guys for actually Ethereum to really become institutionally adopted in the way that, it needed to. And I think this is true for every altcoin that's out there as well, right? There's a never next level thing that, so the DATs themselves are not just holding treasury, they have to show utility. And so AlphaTone basically announced that they intend to acquire controlling stake in Gamey, right? And the Gamey token basically ripped by 70 or 80%, not sure what it is today. But more importantly, it basically demonstrated to a public institutional market, hey, there is gaming in crypto. I mean, yes, within our bubble we know about it, but Wall Street doesn't know this, right? And then, oh, there's 60 million users. I didn't know that, right? Oh, there's a token economy inside the Ton ecosystem as well, that there's something, and it's part of the education and validation. And I would say that makes Gamey perhaps the very first Web3 gaming adjacent digital asset treasury sort of entity that's out there. And that comes to the next point, which is that where is all the growth and innovation happening? It's happening in altcoins, right? Altcoins are bringing in people, whether it's an NFT or whether it's a fungible token, it's utility.
It's experiment pool.
It's experiment pool. It's also where the growth is happening, right? People are building on Ethereum, building on Solana, building on Sandbox, Animoca, whatever that token ecosystem is. Now,
But for the last year, the value of these coins in the sort of value of what they're building, the utility sort of first idea has not actually shown in token prices.
So collectively, it's become a $1.4 trillion market, which was smaller before, right? And the reason why it doesn't feel this way is because you have many, many more millions of tokens to choose from, like you have many, many millions of businesses in the world, right? So that's why it feels this way. Whereas before there were less tokens, so there was more concentration, right? Now, to the point though is that look at the stock market today. Gold is about $25 trillion. The stock market is $128 trillion. Apple is never going to be bigger than gold, but Apple, Facebook, Google, S&P 500, they're all driving utility, usage, and growth. They're basically bigger than gold. And that's what altcoin's going to be. Now, which altcoin? That's a different question, because it's not one altcoin. I think the mistake that a lot of people are making, and our belief around shared network and how we think a whole sort of ecosystem will grow. So we don't believe there's going to be one altcoin that's going to beat Bitcoin. That's very zero-sum classic thinking. We're thinking collectively, as we've seen before, that altcoins are going to expand the space, bring in people. Those companies are going to be collectively larger than Bitcoin, but Bitcoin will keep growing because Bitcoin is the savings account for crypto users.
Is it like 50 of the top altcoins, 100, 500? Like, what's the index?
I think it's going to be much more than that. The reason why is because unlike so S&P 500 type of thing comes from the construction that these companies have a limited number of listed companies, so to speak. In crypto, you don't have a limited number per se, right? You have essentially, you will have billions of tokens. And so rather it's going to be it will be an index, and people will be creating indexes of that type, right? But there's going to be much larger. It won't be like 500. It might be 5,000 or 50,000.
So an analogy that comes to mind for me is the spectrum of professional sports. You got basketball, you got baseball, right. You got soccer, you have all these teams and all these sports. They all have a piece of audience sort of awareness, and it's sort of like, what are going to be the teams, the sports, the stars yes. of the lineup.
That is one good analogy. But the other thing also to consider is that when you bring someone into the world of tokens, they are actually someone who starts to, either whether they have or haven't before, actually understand money better. And so there is no such thing as a crypto user that doesn't have some level of financial literacy. That's not true for other industries, right? Right? If you're in gaming, you don't care if your customer is financially literate. It doesn't matter, right? If you're in sports, I don't care if he's financially literate. But if you're in crypto, you have to be financially literate. So if we, as we here at least, or at least myself, believe we're going to have billions of people in crypto, that means you're going to have billions of people of financial literacy. That means you're going to have billions of liquidity, actually trillions of liquidity, larger than ever before, because people are going to redeploy capital from an investing lens mindset. And think about the leading projects today, like luxury brands. When you buy a luxury brand, you don't think of it just as, hey, it makes me look good and feel good. I think of it as an investment. Rolex is an investment. Birkin bag is an investment. Whether it's real or not, whatever. Diamonds are considered an investment, even though everyone's screaming at the top of their lungs, cartel, scam. People buy, thinking of it from the lens of investing. So everything you do in the future will be thought from that lens of investing. And that's because we already live in a capitalist world in which only a small percentage of people are capitalists. And we're just making more people capitalists because of it.
Yeah, thanks as always for all your insights. Appreciate your time today. Hope you have a great experience here. Really excited to see you again. Washington, D.C., October 29th and 30th on Capitol Hill. It's going to be a blast, and we can continue the conversation with global leaders, enterprise leaders, and whatnot. So thanks as always for your partnership.
Thank you.
Hey listeners, are you ready to amplify your voice in a digital world? Introducing .podcast domains, your gateway to the future of online identity. Whether you're a creator, a company, or just someone with big ideas, .podcast is for you. Own your unique digital identity, connect securely, and explore hundreds of apps with no renewal fees. Don't wait for someone else to claim your name. Secure your .podcast domain today and be part of the next generation of content creation. Visit get.unstoppabledomains.com/podcast to get started. Again, that's get.unstoppabledomains.com/podcast. Your voice, your rules, your identity.
Hi, everyone. Josh Krieger here, host of The Edge of Show, live at Token 2049 in Singapore. Honored to be here with my special guest today, Alok Sinha, who is the co-founder and chief ecosystem officer of Pazalabs BDI. It's great to have you on the show.
Thank you, Josh. Thank you very much. Delighted and equally honored to be here on your show. I know you've done like 450 of them.
Oh, you have a background in it too. What was the name of the show that you produced?
So we used to do Guts, Glory, and Story with some of the global speakers. But thank you. Yeah. 450 is a big number.
It has a ring to it. Guts, Glory, and Story. I like it. So I've had the pleasure to get to know you and your co-founder CJ over the past few days, and I think what you guys are doing is pretty fascinating. Maybe you can kind of start with the genesis here of Pazalabs and sort of your traditional TrackFi experience.
Sure, absolutely. So it's funny. I have been a serial CEO. I have written books which were published by Taylor and Francis in New York, London, India. And there was a point in time I was doing 400,000 miles a year, a week in US, a week in Europe, a week in Asia, and a week in India. I said, I cannot do this any further. And so that is the time that Sujay and I know Sujay for a long time, that is the time when we decided, why don't we do something which impacts, in general, the world at large. And this looks to be too bombastic, right? But you will hear some of which. And so we were sitting with one of the union ministers in India, and this is he was the union minister for farming and agriculture. And India had given a big write-off on farmer loans, billions of dollars. And, accidentally I was there. I don't know him as a friend. Accidentally. And he turned around and said, is there something we can do to make the farmers of this country more prosperous? It was not about waiving, loans, but it was making farmers more prosperous. And so we decided that this is, a blockchain. So we basically, if you go into the details of how that happened, basically farmers get money from the government. They put in the crops, they sow the crops. By the time the yield comes out, it's 6 months down, 12 months. And if something goes wrong, that money is wasted. So we decided to create a marketplace which was based on a blockchain. And that was the genesis.
When was that?
This was in 2020.
Okay, cool. And so fast forward, you guys have a traditional lending business that's done like about $1 billion a year in originated loans, consumer mortgages.
Consumer mortgage.
And then you decide, let's just put a real estate bond on chain, essentially, and I believe it's one of the first in history. Correct. Where did that idea come from, and what's been the progress so far with that initiative?
So, if you look at this platform, it's very generic. So my title is Chief Ecosystem Officer, right? And ecosystem means you don't have any control. Right? So this platform can host any ecosystem. So we have three, actually fintech is the largest, but we do have farms, we do have automotive, and real estate fintech, that is the largest. If you look at the US economy, nearly $14 trillion comes out of home mortgages and downstream securitization and bond market. It's the most expansive bond market, right? And Sujay's business is in home loan origination. He's a correspondent banker, does about $1 billion. And we thought, why don't we put this entire thing on chain? So the reason why it comes is when a loan is originated on chain, it moves at least 5 hands before it is broken down into bonds.
It takes a while.
Yes, 5 hands, 5 turns.
Yeah.
And every time it moves, the entire due diligence of the loan is repeated. So
sounds like
billions of dollars.
Fun as a root canal, pretty much.
Correct. And repeatedly, right? So now what we said was, if you originate on chain, you don't, the data and the documents are immutable. Every time you move, you don't need to
resubmit.
Correct. So what takes close to 4 to 5 months to convert a set of loans into bonds, which means you need to do due diligence, you need to do ratings, you need to issue the bond, we can squeeze it in less than a month's time.
Nice. That's major innovation there. And so far, approximately
300 million. You have a laser on chain and yeah.
And what's sort of the scope of what's been done in terms of types of transactions on chain, and what are the possibilities that you're aspiring towards moving forward?
So let me come down to the real world asset tokenization, which is a very exciting piece that we are doing, right? So we represent a loan as an NFT, which is non-tradable. We represent a pool of loans as a pool NFT where these loans are locked. And we then mint what we call as bond tokens, which is real world asset bond tokens. We use ERC 3643s. These are very safe tokens. They are permission tokens on a permissionless platform. And this is the flow. So basically, we can create any structure, any capital structure, AAA, BBBs, bonds, and it's not only bonds alone, it could be bonds and equity in the same capital structure. It is so dynamic. And so what we have done so far, obviously we have done the tokenization of bonds, but the piece that we are here at Token 2049 is for a Bahraini builder to tokenize his properties. Nearly $300 million worth of properties. What we have over here is just 10 million. It's a pilot property, but some very large properties that we have.
And I haven't been to Bahrain yet. Is this commercial and consumer, or a mix? And is it like, are we talking waterfront properties, or like in the middle of the city? I'm just curious, like the development project.
Yeah. So while I may not be allowed to talk about everything, but yes, these are waterfront properties.
I love to be in the water. Yeah, it's whenever I have the choice.
One is an 80-story building, which is mixed use, office at the bottom, and then a very big hotel name brand at the top, 80 floors. And there is one which is tied up with the Hollywood living style, and that's
so. If you want to can everyone do you have to be an accredited investor to participate in the project, and like what's the minimum investment for this?
So for an 80 million project, you don't want $100. So So the minimum we've kept, although there is a little bit of discussion between, I don't want to call it an argument between the people, between our team, but for the smaller properties, which is let's say 10 million, we think $10,000. For the larger properties, let's say 80 million, maybe between $50,000 to $100,000.
So still, I mean, accessible in a way that was never possible for people that want to get involved in big commercial development. And it feels to me like the biggest benefit here is to create a global investor pool of folks that maybe don't want to buy into a REIT or a mutual fund that's the jurisdiction is outside of wherever they are, where they can sort of stay in a digital currency format and more easily diversify what they do with their digital currency, their BTC, their ETH, their USDC, their Tether, to get a yield. Is that accurate in terms of the benefit, the use case here?
Absolutely. I think today, most of the crypto tokens are not backed by real assets, right? It's on an exchange. You say $50, I accept $50. The price of the crypto is $50, right? And that's how exchanges work. But when you have something behind it, so let's say there's a property which is worth $10 million. Well, now you have pegged the crypto to something real. So we've got a lot of these cases. So there is a hedge fund which is investing in CLOs. It's about $300 million. And they want to tokenize the entire SPV and give away the SPV as tokenized.
Special purpose vehicle.
Yes.
For our audience.
Sorry,
yeah, no problem
with that. It's a special purpose vehicle, and the holders of that would be equity holders. And there is $300 million behind of real world assets, and the holders know how much they are holding. So there is a huge amount of legal due diligence which is needed to be done when you're doing a real world asset tokenization. Sometimes you go to the extent of even getting rating agencies to rate whether this is a AAA class or it's a BB class. Added to that, you're yet getting on a AAA rated bond or a real world asset, you're yet getting about 8%, which is higher than what you would generally get. And on a BB, you can get 15 to 7, high teens, 15 to 17%.
So what strikes me about all this, and it's a fascinating use case for DeFi, is I think there's a natural tension with folks about where to park their money, whether it's in crypto, the big caps, small caps, or whether it's in real estate or a more traditional sort of mutual fund or ETF, right? And it feels like what you're doing is bringing two giant economical forces of nature together, where you can have your cake and you can eat it too. And obviously, I don't want this to come across as salesy, but this is my editorial opinion that this could profoundly reshape global financial perspectives on how to sort of live in a world of crypto and still have exposure to real estate. I mean, is that sort of the aspiration here, is to sort of, and do you see these two worlds coming together because of projects like yours?
150%. I mean, I'll go, and this is not salesy. 150%.
I'm just excited and go ahead.
So think about how anyone invests. So if you have a pool of money, you would generally invest partly in AAA, partly in bonds, partly in equity, partly in real estate. That's the portfolio.
Yeah.
What are we doing? We are giving you an option where all these portfolios are available to you in a tokenized form. So you've got bonds, AAA, available in tokenized form. You've got bonds, BB, available in tokenized form. You've got real estate available in tokenized form. So now you don't need to buy real estate, but you can invest a real estate in Bahrain, in Middle East. By the way, we've got real estate even in Chicago and Texas.
Have you considered letting folks park their BTC, get a loan on that based using the BTC as collateral, and then investing that loan in real estate, where you're getting like that compounded benefit? Is that what you're doing now, or something you're thinking about?
So this is an exact use case that this hedge fund has come to us for.
Okay.
Exact use case. So basically, they have a set of investors who've got BDC. They want to stake the BDC, but this is a very smart thing they have done, which is different from what happened when FTX went down, and that point in time.
Yeah.
So
over collateralization, mixing funds. I mean, there are a lot of problems there.
But even if you have
Under collateralization.
under collateralization. So even if you have, let's say, collateralization at 50%, your LTV is 50%, right? And your smart contract triggers if the LTV falls below, it goes above 50%, if the smart contract triggers. In a falling market, no one buys. So although you've got a Bitcoin to be sold or any other token to be sold, there's no buyers. And that is the reason why suddenly it comes down to zero. That's what happened. Now, this is a very...
you got to claw back on your loan, and
so people who have the money have the money.
A lot of defaults.
Yeah. So now what they have done is they have used both sides. So basically they are asking people to deposit their BDCs, 50% LTV on that. Let's say it's $100,000,
50, and 50 is more on the conservative side.
Correct.
You're essentially betting that Bitcoin won't go 50% below its current value.
But the smarter part is they use the same 50% into some kind of an asset. So this is a real world asset token. And if this collateral goes down, this is more liquid. So they sell it, which means at any point in time, no one is losing money.
Wow. And then you're sort of hedging. I mean, it's a hedge fund. You're hedging real estate against Bitcoin prices. Correct. and just it's balancing the pendulum while making more alpha.
And there's no risk. I mean, neither the deposit, of course, the depositor loses a little bit, but there is no...
I guess if just worst case scenario, the real estate market crashes and Bitcoin crashes, there's risk. Right?
There is risk, correct.
Right. But I mean, with 50%, it's not, there's risk in everything except there's risk in putting your money under the bed and
So only piece is that if there is a margin call because the Bitcoin has gone down, you can adjust the margin call from the money that has been invested in real estate or any other.
So you don't have to,
They don't have to pull the money out.
So obviously you're having some exciting conversations here at Token. For those listeners at home that want to learn more, where do you recommend they go first?
So we are on www.pazalabs.io. We have a Telegram group. Join us on Pazalabs Telegram group. You can flash that on your screen. Thank you very much. But yes, we'll be excited to have those people on board.
All right, great to meet you, Alok.
Thanks, Joe.
Excited to follow you guys on your journey from here.
Thank you very much.
Let's take a pause to shout out one of our favorite partners. For tech innovators facing legal challenges, Zubul Lawler is your go-to law firm. They focus on understanding your technology and business model before addressing legal requirements. Specializing in blockchain, AI, VR, AR, quantum computing, and more, Zubul Lawler offers expert guidance in capital raising, IP transactions, M&A, litigation, and compliance. Visit zuberlawler.com, that's ZUBERLAWLER.com, for cutting-edge legal solutions. Hi, everyone. Welcome back to the Edge of Show. This is Josh Krieger, and we are live at Token 2049 in Singapore. It's bustling out there. You may be able to hear the DJ in the halls as well. And I'm really honored to be here with Keith Kim, who's the Chief Operating Officer at Nextbase. Thanks for being on the show.
Hi, Josh. Thank you so much for having me. Excited to be here.
Yeah, so just unpack Nextbase. They are sort of behind the Maple Story Universe project, also known as MSU. And since the inception in 2021, you've driven the strategy, the tokenomics, the policy design to bring this to life. So I guess with that said, um, other than the fact that Token is one of the biggest events globally and you kind of have to be here, what makes sort of this event, this region important to you guys?
Um, of course, this is one of the biggest events that, that's usually happening from, starting from Korea, where you have, all the conferences, Korean Blockchain Week,
Yeah.
Singapore tokens. But, actually Korea and Singapore, these two regions are one of the biggest fan base of MapleStory.
Okay.
And, I actually graduated school in Singapore. I lived here over 10 years. And
Oh, cool.
I have a lot of Singaporean friends who are like really asking me so much about this product because they grew up playing this MapleStory, since when they're in primary schools. So very, very happy to be here. A lot of huge MapleStory fan base and community bustling up. A lot of builders building on top of MapleStory universe from this region. So definitely one of our top priority,
So for those that aren't familiar with MapleStory, just give us a little bit of the 411.
Right. MapleStory 101. It was launched back in 2003 when I was like 9 years old. So back then, everybody in elementary school, after school, what we do was like meet me at Hedges. That's like one of the iconic towns that exists in MapleStory. It's a MMORPG where you create your character, you grow your characters, you acquire all the loots, equipments, enhance them, get stronger, defeat monsters, things like that. And
So how many characters do you personally own?
Over 60.
And what's your OG like favorite character?
OG favorite character. That's a tricky question.
They're all. It's like people ask me like favorite show, and it's like I mean it's like 450 shows. They're all family.
So right. I have spent most of my efforts playing a character called Blaster.
Okay.
So it's a special character that takes a lot of getting used to in terms of mechanics.
Yeah.
I
Complex individual.
Super complex, and I spend like years mastering all the combos and everything.
Right on. So you sort of speak about this meta play thesis where fun, frictionless must go hand in hand. I've heard about this. Like almost everyone that comes on the show in gaming talks about this need, but yet here we are. Most games haven't accomplished that objective, even though it's like right there in front of us.
Right.
Why do you think that is?
But actually, coming from Nexon, which has been doing this, gaming business over 30 years now, and MapleStory itself, as I shared with you earlier, is 23 years old. And we do have a lot of metaplay elements that are, already out there running in the Web 2. But, we believe that could be done much better because of the financial layer, blockchain layer, the token layer, that, the ability to trade what you own and, those things that were very, very important and valuable in Web 2 that cannot be traded now can be traded. So, this whole layer makes it much better, much easier for these community to come up with this meta play layer. And let me just give you an instance of what's happening in the Web 2. In Nexon, we publish a game called FC Online that used to be called FIFA Online. And, the core of the game is you play your character, your team, right? And you do a match with someone else, team versus a team, and you control your character, scores a goal, and there's a winner and there's a loser. That's the core aspect of the game. The meta play that exists around this FIFA is people spend much more time on their mobile and web instead of that core game to trade their characters, to enhance their characters, team formations, and all these meta play layer that surrounds the core play. And when we have rolled this out a few years ago, and this became a huge part of the entire gaming community.
Nice.
It expanded the audiences as well. I don't have time to sit in front of a PC to play the actual match, but maybe I can do that during the weekend, but during the weekdays when I'm on the subway, on the way, I can just quickly use my mobile to do all the meta play layers. So, we are bringing this, meta play layer into a lot of different IPs that, Nexon owns. And one of the biggest example with MapleStory, we are doing that in Web 2, and we are also expanding that in Web 3. And in Web 3, how does Web 3 Elements makes it much easier is that we can we can incentivize the builders to create meta plays, with us. So in Web 2 is mostly, we have to build it ourselves. In Web 3, we can allow these builders to come and join and expand these IPs for us and along with us. And, with these, creativities that comes from the community, it's the quality is very, very nice. We're seeing great products coming up. The speed at which these contents are being expanded is super, super fast as well. So we believe, blockchain is really helping us to achieve this meta play layer, to be done much faster in Web 2.
Right on. Let's talk about stablecoins for a moment.
Right.
There is a thesis that stablecoins offer a significant value in gaming. And then there's other folks that say, no, it sort of defeats the whole purpose of gaming and you don't really need stablecoins. What's your take?
I think really depends on how those stablecoins are being used and designed in particular game system. Stablecoin might really help a game to grow and might break some games. So I think it really depends on how exactly the use case is.
Are you looking at stablecoins?
Of course.
Yeah.
Starting from United States, we are seeing these blooming of it, like each government in Asia, they're coming up with we have to make our own stable coins and boost the digital economies, and that's really blooming everywhere, and it's quite evident. Like, I have a very strong thesis that everything will be traded on chain. It's bound to be that way, and with that trends on, people will start to recognize whatever that they have in the virtual world, in the IP, is also an asset. And I think it's only a good news, to open up a market for these asset classes to be traded, viewed as a legitimate asset class, something that wasn't too big without these stable coins and on-chain economies. So I think if you were to open up these already existing huge market of gaming and make them more legitimate, make them more tradable, that will open up the doors for external investors who didn't really play the game, which means they didn't really have the access to the game assets. Now they do have the access, so that will make the market much larger. And definitely, this is going forward. This is gonna be the game changer for the game industry.
Does that sort of shift gears for like builder first economies that are sort of a big part of your roadmap?
It will definitely help our roadmap to achieve there. Builders, whenever they create a new product, they create a new games or meta play layer, they want whatever that they're creating is more valuable. So this stablecoin economy and growing on-chain economy is only going to create the total addressable market bigger for them as well. So definitely going to be a big impetus for us.
And there's this shift, I guess, towards mobile in the industry, right? I mean, I know that's how I play games. I have a couple at a time, and just because I get really addicted.
Right.
I'm sure I would get addicted to your game, so I'll have to think about that decision very carefully. At that same point, how has sort of been to sort of shift towards having a hybrid? When did you guys get into mobile, and where's the traction with mobile relative to traditional PC going?
Right. So, I mean, when we're talking about like Nexon, our headquarters, Nexon has created its first mobile game over a decade ago.
Sure.
Definitely. But, when we narrow down and zoom a little bit into MapleStory IP, the first MapleStory mobile game came almost 10 years ago.
Okay.
And it's actually in Web 2, it's thriving. It's growing very, very rapidly. And, like you mentioned, a lot of people are playing, mobile games instead of the PC games because, we all don't have that much of a luxury to sit in for PC.
Yeah, and our phones are tied. We're all Androids at this point.
100%. And But what I want to create is, how I want to like reimagine this is, instead of creating a separate virtual world on the mobile device, I want to create a seamless, transitionable, back and forth kind of mobile environment that's, whenever you want to play your character, or whatever you have in the game on the PC, you can do so. For example, during on the weekend, when you have less things to do, more time to play the game, then you can choose to be online on PC with the same characters, same assets. And whenever you're on the go, you take that into the mobile. It's not a separate siloed version of, two different versions.
So Netflix now lets you play games where you turn your phone into a controller.
Right.
So I'm curious, like, how that type of technology, what you think about that in terms of presence, roadmap, the future, because it feels to me like less and less people are going to own computers, and they're just going to sort of use their more advanced smart TV as a access point to all content.
Right. But I think it really we might be addressing a quite a different audience here.
Okay.
Like, when we talk about something very light and casual, it should be on the device that is more accessible with less control. You don't need a whole keyboard to play a 3-piece puzzle game, right? You just need a touch screen. It would be a wrong strategic approach to have that playable on PC. But, when we are talking about more hardcore games, that, you take a lot of time to master all the mechanics of it, they need to be on PC. And, making it expendable and, available on more casual devices and more casual manner is definitely one of the approaches. But how do we do that? Like, people don't carry around keyboards with their mobile phones. We extract certain casual elements that's addictive, that exist in a very complex game.
So is it a mini game kind of?
No, it's not exactly a mini game.
It's somewhere in between.
For example,
Yeah.
Maple Story is a complex game. It takes years to master and learn. But, for one of the core pillars of Maple Story is item enhancement. It has elements of chance. You have to accumulate the resources to do the enhancements by doing a lot of different quests and achievements inside the game. And with these, you can try the enhancements. And this is the way you get faster. We just extract that element out of the complex Maple Story, make it available on mobile. So when you have time, you will spend your time in front of PC to accumulate all the resources that you need. And when you're on the go, you can actually just play the enhancement part on the go. So and we can make these little pillars. We extract these little fun pillars out of the complex game, make them available on mobiles. This Smithy idea is just one of them. And I think we will expand this way.
Yeah, I appreciate what you're saying. In the game, like Last War, I'm sort of upgrading and upgrading, and they've managed to figure out just the amount of acceptable time between upgrades that I can tolerate. And I'm all like, the last one is taking longer than I want, like, to get all this gold.
Impetus to pay.
And like, I can't play the game on accumulating gold because I'm spending it, and it's just like, man, I should just like let the gold just accumulate, but you still have to go. It's very interesting how you guys have mastered this. And in terms of sort of lessons learned overall, can you distill sort of your experience down to sort of some of the key insights that other game developers should take note of, that maybe I'm sure you've shared with sort of other folks? What is like one or two deep insights that maybe are sort of counterintuitive that you share with game developers? Because I mean, we all talk about the obvious stuff, make the game fun, freshness, like, what are some deeper insights?
A lot of people ask me, like, how is Maple Story doing so well in Web 2, and Web 3 as an IP? What it takes, what is the secret ingredient to it? And I have not built Maple Story for that long to, really represent the IP and give you guys, this is a secret. But, one thing I realized is that there's no secret. It's, but what it takes is, people make good decisions and bad decisions all the time, all right? And let's say they're 50-50, making them 49 and 51 48, 52, and repeating over again for years, that is the secret ingredient. Always choosing the, the better answer over the worst one, and doing that over like 5-10 years, thinking about sustainability. These good decisions kind of stack to each other, make a compounding effect.
And is it also about acknowledging the bad decisions transparently with your community?
100%. And this seeing a longer time frame. So like you can lose a little battle, but thinking that you won't lose the whole war. And you're actually doing an arms race, right? Competing with different IPs, also the metas and everything, and making sure that you're building your game with a vision in mind that's very, very long, 10 years, a clear statement that MapleStory IP is gonna be this, right? And fine-tuning your algorithm so you always have a higher probability of making a better decision. I think that's like the secret ingredients. But I see a lot of games, I think this doing a lot of fast iterations, which is a good thing, but we always have to keep in mind that these iterations have to build up, stack up for your 10 years roadmap. Not like, hey, let's try this, doesn't work, let's ditch it. No, that kind of attitude needs to change if you want to build a grand IP, I think.
Keith, really appreciate your insights today. If folks want to learn more about MapleStory, where should they go?
They should definitely check out our Twitter. They can look up MapleStory Universe. And they should also check out my Twitter. I usually don't post a lot, but I usually post the alphas and the leaks. So yeah, look me up, Next Space Time on Twitter, and MapleStory Universe on Twitter. So yeah.
Keith, thanks for hanging out
Thank
today.
you so much, Josh.
We've reached the outer limit at the edge of show for today. Thanks for exploring with us. We have room for more adventurers on our starship, so invite your friends and cool strangers to join our journey. If you're among the hundreds of thousands following us on Spotify, iTunes, iHeartRadio, or watching us on Myco or YouTube, please hit that subscribe button, rate us, and make an awesome comment too. And don't forget to pass this episode along to a friend or two who would benefit from it. Doubling back to again, recommend checking out myco.io, where you can watch The Edge of Show and earn for your time and attention. That's myco.io. Don't forget to visit theedgeofshow.com. The is part of the domain name, where you can learn more about collaborating with us and also subscribe to the Edge of Weekly newsletter for the latest Web3 news, events, and show drops. In addition, connect with us on all major social platforms by searching for The Edge of Show. Join the exciting conversations happening online. Lastly, be sure to tune in next time for more great Web3 and AI content. Until then, keep pushing the boundaries. Thanks again for hanging out with us today. The views and opinions expressed on The Edge of Show reflect solely those views and opinions of the show host and its guests. Please make sure to do your own research. Our show is not financial advice. You understand that you are using any and all information on or through this podcast at your own risk. Whenever making financial decisions, we recommend doing your own research and talking to your accountant for financial advice. From time to time, we may feature sponsored content on the show for which we receive value, and we may share links for which we receive a commission if you make a purchase through one of these links. Refer to our website, www.edgeofnft.com, for our full disclaimer, terms and conditions, and privacy policy.